Hi, good morning, everyone. Welcome back from coffee. I hope you're caffeinated, ready for the next few sessions. Welcome to this panel on compliant investing for institutions. I'm Andrew Price. I'm the Chief Compliance Officer of Zodia Markets, a institutional-only crypto brokerage and exchange backed by Standard Chartered Bank. I'm joined by two very knowledgeable people. I'll let you introduce yourselves.
I'll kick off. Thank you. Good morning. Sabrina Wilson. I'm the Chief Operating Officer of Copper. We are a digital asset institutional custodian, also offering prime settlement collateral management services to institutions.
Hi, Jenna, Wright, the Managing Director of LMAX Digital. We operate an institutional exchange in the crypto space owned by LMAX Group, who have historically been operating foreign exchanges around the world.
So to kick off this panel, I think we've seen over the last year finally some regulatory clarity, and kind of leading on from the panel before this, we've seen the UK Treasury response to the consultation. We've seen the final publication of MICA, and we've seen the White House publishing their digital asset framework. But I think we've seen divergent approaches. We're seeing differences in opinions. How do you think institutions looking to enter the space should be looking at these differences and these divergences of kind of regulatory approach? I don't mind who.
Oh, I'm happy to kick off. Big question, big topic. Yeah. We have only 20 minutes on this panel, so we'll try to really focus on the institutional side of that scale, because issuance as well as investor protection are also big topics, but perhaps we won't cover those today. In terms of the space itself, I mean, the regulations that you've named are very broad, and within the industry, like any financial ecosystem, you're going to get various sets of actors between, the trading community, which could be market makers, liquidity providers, exchanges, versus the post-trade world that we represent this morning on this panel. The variance in regulations are going to be very broad. I think one of the pieces that really is going to be very interesting beyond all of those regulatory regimes landing pretty much at the same time in various levels of maturity is how we gain consistency across the globe. Because if you follow the traditional financial markets, there is a particular mechanism such as equivalence that allows really a certain level playing field across the various actors and how they interact with the market. So I think here what's really fascinating is the development of all the regulatory frameworks across the globe that are more or less, I think you used the word consistent or inconsistent, but what will be really interesting to watch is how we land from an equivalence perspective. So for institutions, to answer your question, the depth of change and the rate of change is going to be pretty fast-paced. I mean, MICA, not to name it, is the most fully fledged text that we have at our disposal today. Seeing what the UK will do to respond to that and really gain to the same level of maturity, and the US landscape, again, going from very state-based to federal level, and how that plays out will be an interesting puzzle to decipher initially, and also we'll see how we can gain the same technology agnostic, pragmatic and consistent regulation across the globe. So loads to unpick.
Yes, absolutely.
And also to add, the regulatory landscape has been very slow in moving forward. So 2022 and some of the market activity has probably been very good for moving that along. I think there's been some governmental pressures to start looking properly at regulating crypto across the globe, which is obviously very positive, but we shouldn't get too carried away on what will come of this in the next 6 to 12 months. We're 5 years in of being in crypto, and it's been slow, as with institutional adoption. And there are a number of other things that I think all of us on the panel here have been doing to continue to build the ecosystem, so that we're not all sitting here waiting for regulation to happen, really, because we might still be waiting a long time. So the building out of execution venues, like what we've decided to do, and you guys with custodians, these are form key parts of the ecosystem that we need to continue to build and ready. So yeah, I think we're all very positive about what's happening. The market turmoil this year has been good, right? We need to actually weed out some of the bad actors. I hate to say it, but I think it's been quite good for the industry. And, you know, we'll start to see frameworks now. My biggest concern or my biggest question around regulation is, are jurisdictions, are regulators, are they comfortable in what are they regulating and who are they protecting? Because that's key, right? They need to establish that to come up with the frameworks for us to then bring into our ecosystem to start following. We need rules, and those rules need to be based on what we're regulating, who we're protecting, and everything else.
Yeah, no, absolutely. And I think what we've seen is in the absence of regulations such as in market integrity and market abuse, that firms have kind of voluntarily implemented controls on market surveillance and so on, which is really kind of the industry leading in looking at what that looks like, and I think that's actually been really good. And touching on a point that you had, Jenna, where there's also been this year a lot of turmoil. There's been events and issues like Three Arrows, Celsius, and the market turmoil layer 2 hacks. What do you think that's done in institutions looking to enter the space? Has it had an adverse impact on their timing? How should they be looking at these year's events and approaching their next steps?
Shall I go? So for us, it's been an interesting one. So whilst volumes have been off this year relative to last year, I think we're all aware of that. I think you have to look to divert your focal point a little bit. So we've always been a spot venue for the last 5 years. This year, we've worked out how to launch futures. So how do we offer the institutions who don't have that regulatory clarity today access to crypto? Now, a cash-settled derivative in crypto for us looked like the right product offering to add to our suite. So that, from our side, will be working with Six Group, something that the institutions are very familiar with. How do we get them to trade crypto without waiting for the regulatory piece to come in? So I think it's just about you have to give market access to the institutional parties out there to, get them in.
Slightly different angle of approach. Obviously, our businesses are quite different. The point you're making is very important. The explicit compliance to a textbook that's already published, and that's essentially the rules of the game that people can comply to. What's important in the new paradigm that we're in is also the implied compliance and expectations. And I think all of us that have come from traditional finance and markets background in particular, we understand the playbook. And when you mention manipulative practices, there are certain things that you really shouldn't do. So as much as the textbook is not necessarily there and written and fully fledged, there's also the spirit of compliance. So I think in the first part of your question, I think there's an element of the implied textbook that everybody knows they should follow. So I think that's an important one. And pivoting from some of the incidents that you mentioned, what we see when clients are coming to us and asking us questions about our business, obviously we are a custodian. By definition, the word custody implies trust. So with that comes a whole level of investment in governance, in risk and control and compliance. So I think for institutions specifically, when you're looking at engaging with a custodian to secure your assets, to also be able to offer intelligent collateral management solutions, the number one thing they look at is, what do you do with my assets? What do you do with my deposits? And so all of the conversation shifts from product, functionality, workflow to also compliance, risk controls, and how do you govern the business? So what these incidents have done is really move the dialogue along the curve of, I would say, you mentioned bad actors. Sophistication is maybe the more positive side of things, but it's a maturing market, and the conversation definitely has shifted. And in post-trade, it was always the dialogue, because you kind of secure the assets, as you would know. So you need to make sure that you do that in a very implied, compliant way.
Yeah, no, exactly. And I think one of the things that we've seen in terms of one of the gaps that we've seen which is changing is the market structure side, and where we're looking at working with institutions, they're coming from a more familiar financial markets and custody space, and so historically there's been kind of vertical integration of custody and the markets business in crypto. That segregation of duties and segregation of controls and risk management, actually spitting those businesses out, you then see the differences in requirements of controls for a custodian versus a markets business, and that enables you to kind of control some of your risks better, like counterparty credit risk. You kind of mitigate some front-running risk and things like that, which we've seen as a bit of a gap, and you've seen kind of the SEC litigate on some of that, for example. What other things are you seeing in terms of what more needs to happen to accelerate this institutional adoption in the digital asset space?
But also just to add to that, right, we've been dealing, or firms have been dealing with offshore entities for the last 5 years. So we are starting to see, I mean, my team are dealing with RFIs every single day right now, whereas they should have been dealing with those earlier on. Trusted counterparties, onshore entities, they're all of a sudden important. But actually, if you've been in financial services previously, that would have all been standard. Crypto's sort of managed to get away with something for the last few years that now perhaps we can address as a result of some of the issues that have happened. To answer your question, sorry, I deviated a little bit. We totally lost my train of thought. Credit, that's what I wanted to say. For us, as you know, we know regulation isn't happening. We could be a couple of years away from full clarity that will help true institutional adoption, but there's still some items. So I think between us on the panel, we've been looking at execution venues. So proven and tested technology for us has been what's really helped us do so well in crypto. We've been doing this in foreign exchange. It looks very similar to what we've been doing for the last 13 years. Giving someone trusted technology has been key, but what's still missing is that credit piece. Real institutions, banks, we need to move away from that offshore entity type interaction, the bilateral interaction that we're seeing a lot of in crypto. So we still need that method of, in foreign exchange, we're very much used to a prime brokerage world. You wouldn't necessarily face LMAX credit in FX terms. In crypto, you absolutely would. That would be normal. But we do need these ecosystems to come in. We do need balance sheets to support what we're trying to achieve. And we need banks and institutions to, back to what I said earlier, they need to do a lot of what they used to. They like that comfort zone. So I think, a bit more prime brokerage with real balance sheets, not just we're priming you in with some technology. We need underlying funds behind that to support that. So I think our day-to-day issue still is seeing a lack of credit mechanism in the space.
No, that's fair. And also, I mean, you've got the chain, right? You've got the client themselves, and our businesses only exist because we have clients. And clients themselves, if you look at financial actors in particular, the panel is on institutions, so I will really talk about institutions rather than anything else. But they also are under certain levels of pressures from their own regulatory framework. So it's not something that they demand just because, it's also obligations that they have. And to the point that you're making, people know what they like and they like what they know to a certain degree, and they will expect that level of clarity and that end-to-end comfort that when they are allocating, because the portfolio allocations are between 2 and 5% of assets for any given hedge fund or asset managers participating in the space, unless obviously they are crypto native and dedicated. But otherwise, the transition from financial services institution to participating in crypto is still a small amount of AUM. So what you don't want is some huge divergence in the way you would be thinking about the same topics, be it if you're trading fixed income or FX or shares, and suddenly you add a crypto strategy. There's an element of commonality that people will be looking for. And so your core question was really, what is missing? A lot is still missing, because this is a textbook that is really in flux and developing. But all of the actors, including our firm, Copper, are really pushing really hard to give clients institutions a very consistent experience, very consistent dialogue, very concise and deliberate dialogue around the concepts that our clients are familiar with, in order to really not make the crypto investing something that is something on the side that is unrelatable, but really take them on the journey of what does it mean. And it's also true that the challenges of operating a crypto business are very different. They switch from operational workflow to really cybersecurity and central source of information. So there are loads of positive, and with the time that we have left, I'm not sure we'll be able to cover that. But the operating aspect is very different. But in concept, we're still really trying to take people on the journey and making sure that they get at the very least a consistent narrative and experience.
I think we still have to perform the role of educators as well.
Yep.
I think we touched upon that at the back. Crypto does have a stigma attached to it that references hacking and online activity, and there is an element of our institutional clients who don't get it, want to understand a lot more, and we perform that role, whereas sometimes in other asset classes you do wonder how much people actually know about where the gold bars are stored or where the barrel of oils sit. There is a lot more, we still, to this day, read about hacks regularly. So there is that discomfort, I think, with the clients that we're trying to onboard and bring into the ecosystem, where we have to support them. And, it might feel slow, but longer term, there's a reason for what we're trying to achieve. And I think helping them, showing them what you do, how you do it, and why you're doing that should really help bring the institutional adoption along.
Yeah, no, I completely agree. And I think it's a trust question, and part of that trust question is part of the regulatory clarity. But without that, we can build that trust in other ways, through education, through technology, proven technology, etc., which I think is really important. And what institutions should look for when they're choosing their partners. Who can you trust? What's their pedigree, what's their background, and things like that, which I think is really important. I'm just conscious of time. I guess the final question, over the next 12 months, what is maybe a big question which we don't have time for, but what can institutions expect to see in the next 12 months in terms of potential road bumps, and how should they kind of be dealing with that?
I think implicitly we covered a lot of them. I think if you look at the notional really invested in crypto versus just traditional custody, for instance, and referring those numbers, you get a multiplier of 100 factor. So growth in adoption in crypto investment is obviously a natural play, right? You go from an industry that shrunk from 3.1 trillion at the peak to now hovering around the 1 trillion. So there's some recovery, some way to go there. The next frontier is really tokenizing everything. I think you probably read everywhere digital assets, tokenized securities, and really the potential of the underlying method rather than the asset to really take over some parts of the infrastructure. With chatting with a number of people here, if you look at the Cybos conference, not to name them last week, they made a big launch on T+1 settlement, which is really quite radical for the traditional financial markets. This is something that the blockchain technology can deliver. So the education realization that the underlying method rather than the cryptocurrency assets can actually be differentiating for financial markets, I think is a very, very important development. But that takes us away from crypto investing. This is more about the potential of the tech. There's a long way to go in crypto investing, in clarity, in geographical harmonization, in just general growth of the asset class. A lot of really interesting innovation that can transpose nicely into traditional finance. So I think that loop and that progress is going to be very interesting to watch.
Yeah, 12 months is not very long in the grand scheme of things. Hopefully we will get out of the crypto winter. That would be one good thing to come out of the next 12 months. And look, I think we're starting to see frameworks pop up on the regulatory front. So for us, it's been a year of building and readying ourselves for what's to come, the next wave of clients and the next bull run.
Yeah, No, I completely agree. I think in the next 12 months, with this regulatory clarity, institutions should be looking at where they want to establish, who they want to partner with, and really starting to use companies like ours to educate them and build that trust and build that knowledge internally so that they can then confidently go out and invest in crypto. And I think that's really important for them to start doing earlier. Otherwise, other people will be doing that and they'll fall behind. So I think that's what they should be looking at. We're out of time. I say thanks very much for being a great panel. If everyone could give a round of applause, that'd be great.